Alright folks, welcome to the video. Anthony Special here with Hawkeye Traders. Going to be dissecting the Euro FX futures market today. We're looking at a 3-minute chart and we're going to look at ultra high volume and how they can react in multiple different ways and why understanding where these occurrences happen make all the difference. So let's dive right in to the video. So I am taking a look here at the 7:30 a.m. candle right here. Let me just drop an arrow there so you can see it with great clarity. That one right there, in fact. And I'm looking downward at the volume, the Hawkeye volume, right there. I'm looking at that big bar that pushed through the volume radar dot. Okay. Now I want you to notice something. This candle specifically closed roughly above 50% or at 50% of its overall move. So what does that tell you? Super high selling volume, but the bar fails to close in the bottom 10, 15, 20%. That tells me that what's happening here is the sellers are being absorbed by the buyers. While the seller's presence is strong, they're having a hard time penetrating through this area. All I did was draw a line at the bottom of this wick because I now need to see, hey, can the sellers push through and settle below? Okay, I'm a big proponent of waiting for the close of the bar. It doesn't matter if you're using a 1 minute, a 3 minute, a 5 minute, it doesn't matter. But I base all my trading decisions around the close of a bar or candle very specifically. So you can notice we come into this area a few times. We actually penetrated a little bit, but we are unsuccessful in pushing higher. What does that mean? That tells me that all these sellers here got absorbed by buyers, and there's a better than not chance that we're going to push higher, probably back into these prior highs, resting up here, okay? Somewhere up here into this area, okay? So this tells me, hey, sellers are interested, buyers aren't going to let it happen. What is most likely to happen? What's most likely to happen is we're going to push our way back into where price originated its move down from, okay? So this is one way to look at ultra high volume as a reversal factor, okay? The other way is when you get super high volume here and you get a candle with a huge wick on top and the candle now closes lower than it opened. Now I'm using this wick as what? As resistance, correct. Correct. This is now resistance, right? Because it's told me there's a lot of sellers here. The buyers pushed it all the way up. The sellers pushed it all the way down. So the sellers controlled from the top to here, and the buyers had their pushback at this level here. So to me, unless we violate this candle to the upside, we're not going higher. Now I also recognize that I have supply overhead, which has already been proven that it fell here, tested here, and fell again. So this is the second way I can use ultra high volume for not just a reversal type setup like the first event, but the second event tells me who's in control at this point now, moving forward, right? The sellers are. So all I have to now do, since the analysis has provided me with what I need to know, is pull back and just extend out these areas very specifically, because these areas are going to be, whoa, that wasn't what I wanted. These areas are going to be, if this is going to let me do it, making a mess, here we go. You know, these areas here are going to now provide what? You have a what we would call a stacked layer, right? You have a layer on top of a layer of supply. Notice price comes down, comes back up. You can see we struggle here a little bit, keeping in mind that the first test of this area again pushes price back up. We break it, we come back up, we break it, we start placing lower highs, we start placing lower lows, and eventually what happens here is the buyers step back in and the sellers are unsuccessful in keeping the price down, and we start coming back into supply or resistance. And you can see first push up, we pull back, we push up, we pull back, we push up, consolidate. This here, guys, is what we call a liquidity grab. What's a liquidity grab? So anybody that has a short position that they either entered short on this candle or short on these candles likely has their stop resting just above. So all the market does when it pushes up here is grab liquidity. It takes those stop losses out, and then the market proceeds to push downward, and now is kind of at the end of the day just floating sideways. But the whole purpose here, guys, was to show you how you could very easily identify very specific things that may occur in the market by understanding volume, right? So Hawkeye makes it very easy. We provide you with our proprietary volume print that populates on TradeStation, TradingView, NinjaTraders, and MetaTrader. We provide you with our volume radar so that you know when it's high or ultra low volume. We provide you with our volume paint bar so that your bars get painted the color of the corresponding volume that is in control. And then we also provide you with these purple bars, which are called the wide bars, right? These are bars that you want to pay very specific attention to, especially when there's ultra high volume, especially when there's massive wicks on top of them. And guys, that's all that it comes down to, right? I just need to now spend the time, invest the time in understanding when these high volume price action pairs come into play. What is the reaction between them? How can I learn from them? And how can I now employ them into my trading? And it's not something that you have to do all alone, because we provide you access to the Hawkeye Mastery library, where every single thing that we are going to give you is fully explained in a manner that makes it super, super easy to understand. So you can come in and go, okay, I see this ultra high selling volume, but I also see this big wick and failure to close below it. Better than not chance that we're in for at least a short-term reversal. Short-term reversal to where? Well, probably right where price failed from. Okay? And then inversely, hey, I got this huge monster wick on this huge monster wide bar with this huge monster selling. Chances are this whole area up here is now going to be considered supply or resistance. And guys, I use this every single day in my trading, and I genuinely believe anybody that's not using this every single day in their trading is lacking a huge component that they must have in play in order to accurately navigate the market. Because at the end of the day, guys, it comes down to your understanding and employment of both volume and price action. So if you want to learn more about Hawkeye indicators, there's some links below this video. I encourage you to click on them, consume the content. I also encourage you to reach out to myself or my concierge team. Let us talk to you. Let us answer your questions that you may have. Let us help you decide if having this in your toolbox is worth it. Okay? I believe it is. I am a paying customer of Hawkeye. Okay? I approached them and said, hey, listen, I love your products. I want to help other people love your products, right? I paid for my Hawkeye indicators. They weren't given to me for free. None of this, was preemptively came to fruition outside of the fact that I just genuinely loved the product and I wanted to help the company bring it to more people. And that's ultimately what I've done. And I've created a wonderful living helping people become better, more consistent, more accurate traders. All right, guys, don't forget to like the video, subscribe to the channel. I'll see you in the next one. God bless.